Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsarthi, and in today's markets react to strong inflation prospects in the US. Consumer price inflation came in at 6%, which is a three-decade high, and this gives rise to fears that expectations can rise sharply globally because US inflation in the last almost 15 years or even higher, longer, has been in a range of well below 6%, right? Very well below 6%. And in fact, India's consumer price inflation is lower than the US, though core inflation is at US inflation levels. And the Fed is still contemplating a gradual exit from its policy. But will such high inflation hurt the US public? And will there be a clamor to rein in inflation at the public level? That remains to be seen. But effectively, the impact on global markets and on Indian markets is highly negative if things go out of hand in the US. US Treasury is still way off below highs seen in the last few weeks. Rose post the inflation numbers, but by much. While in the Indian markets, the government bond yields reacted upwards, largely on expectations that RBI will take note of high US inflation and may start to normalize policies sooner than expected. The rupee fell on worries that the Fed might start to tighten policy faster, and the Sensex and Nifty too fell on two aspects. One is the fact that on the US inflation aspect and its repercussions on global markets. The second is on the China's Evergrande, the reality firm, that is teetering on the steps of default. And in fact, there was last minute pledge by the promoters to pay interest on the bonds. But how long can this continue? They're not able to raise liquidity. And so this is weighing on markets globally and in India as well. Do not forget to log in to Quick Invest, a curated list of bonds. You have the best bonds available to see how you can invest in times of inflation. And we give you the bonds with the right prices, the right information, and the most transparency and seamless investment process. Thank you very much for listening in, and do not forget to subscribe to our YouTube channel if you have not done so already.